Hey, everybody. Thanks for joining today's webinar. My name is Dave Mantell, a certified financial planner and partner with Stabler Wealth Management, and I will be your host for the webinar today. We got a good topic ahead. So commonly we hear the question as Boeing employees are approaching retirement, how much do I need to retire? Can I retire yet? And that's all important information and one that we've covered in past webinars and will continue to put a lot of attention on. But for today's topic, we look at what are some things that people are potentially not looking at that can derail them once they reach retirement? What are some of those common pitfalls? And so this will be a great presentation because that goes hand in hand as with that retirement decision and retirement buildup, steps you can be looking at now to not only focus on that magic number, but what else do I need to be considering to make sure I do have a comfortable retirement and everything works out the way it's planned. So today's presentation titled Three Common Retirement Icebergs and How to Avoid Them. When we think of a retirement iceberg, the way we consider that is something that you may not really be aware of that's kind of lurking in the distance. But as you get closer and into retirement, once you hit it, there's a lot more damage that can be done than is initially realized. And so today we'll go over those three retirement icebergs, common pitfalls that we see occur in retirement that people are not necessarily prepared for, and how to proactively avoid them to give yourself a much better success at the retirement that you're targeting. All right, so launching in, before we jump in, I do want to do a quick introduction. So again, my name's Dave. I'm at Stabler Wealth Management. We specialize in working with Boeing employees and retirees. We have a team of certified financial planners, and we are here and focused on providing experience for our clients to help them successfully retire, continue to enjoy their retirement, and live a comfortable retirement, as well as do all the actions needed to not only make sure you have your right investment mixture, you have the right income plan for retirement, you're looking at tax strategies, risk protection, estate planning. And so we are there for our clients to look at all angles of their financial life. And so you could go to our website. We got a shortcut, planyourboeingretirement.com. That'll take you right to our Boeing page, where you could read more about us and how we might be able to help you and provide value. All right, so with that, let's launch into the presentation. So that first retirement iceberg that we commonly see, and really I probably view this as the biggest, is underestimating retirement spending. Commonly, when folks are looking to retire, we see it all the time where there's an assumption that, hey, I'll probably spend less in retirement. I'm going to have less expenses. I'm not going to be putting in my money in my 401k and savings. And a lot of time that's sort of glossed over. But the reality is it's amazing as you have more time on your hands, as you look at how much things cost with inflation and whatnot. This is something in an area that is commonly underestimated. And so when we think of the three core components of a retirement plan, this is one of the big three. So we have income, what's coming in the door now and then in retirement. We have your financial assets, which you've saved, which you put in your 401k, pension, Social Security, which ties into that income component. And then lastly, we have your expenses. What do you need to support to keep up your lifestyle and hit your goals, both for short-term, ongoing, and one-off? And as I alluded to, more common than not, we see spending in retirement is at least equal to spending when working, and quite often can be more. And so this is really like a hit on that number one item we tend to see derail retirement plans, is an underestimating what actually the spending will look like now, but also in the future. When you're looking at your expenses, there's really a few different ways that we can bucket that. But first is, what's our essentials? Putting food on the table. We want a roof over our head. We want to keep the lights on. And so that's sort of the bare minimum items. From there, we have more discretionary but regular expenses. eating out, travel, hobbies, things that regularly year to year are going to occur and you want to do, right? Entertainment, things like that. And so those are regular expenses that we want to budget for on a monthly basis generally, if not quarterly or annually at a minimum. And then the last bucket is the other chunk items. And so these are things that come up a lot, right? Hey, I'm retired. My kids are young adults now. They're working. It is so expensive to buy a house anywhere in the greater Seattle area. I want to help them with a down payment. Hey, oh gosh, new vehicles, right? That doesn't come up every year, but something that comes up. Now I have this time on my hands. I'm spending more time in my shop. I want to do a renovation and expand or a new kitchen, bucket list items. And so these are critical as well. And a lot of times when you're working and don't necessarily have time or life hasn't resulted or hit on these areas yet, you commonly may not think of them as part of your spending plan. But in reality, even though they're chunky and regular, they are. And a lot of times can be just of, if not more important, as it's hitting big goals and kind of cultural principle goals, things that are important to you and your values, such as helping family. The good news is it's not building an airplane or rocket science to do this, right? And it's just a matter of getting organized, putting in the time and understanding what to look for. We have a wonderful spending plan worksheet that we do. And again, keep in mind, I'm calling this a spending plan. It's not a budget. We want to build out everything that you desire to be doing lifestyle-wise. And we want to make sure that we have a plan to handle and match that. And so this isn't limiting you. It's really the opposite. We should be thinking big, expanding our horizons. What could be enjoyable? What are those bucket list items? And assessing from there. And so we have a great, 1-2 sheeter where you could walk through. We always recommend first look at what you have been spending. Look at your credit card, bank account statements for past 6 months, and you could look at extrapolating that going forward. And then also really brainstorm, sit down with your spouse and say, hey, we've been looking forward to this retirement. Part of that is we're going to have more time on our hands. What do we want to do? What's important to us, and build that in there too. And then that way we could get very granular in terms of putting together a game plan and then making sure we have a retirement strategy to support that. And so, again, don't view this as a negative thing. It's really a healthy exercise for anybody to do, no matter what your balance sheet is, what chapter in life. Fortune 100 companies do this, or should be doing it, right, at least. And so it's just a real principle and foundational thing to be doing on a regular basis. I am more than happy to send our spending sheet to anybody who's interested. So go on our website. There's a way to contact us. Again, planyourboeingretirement.com. And so feel free to get in touch. But happy to send this over. It's a really good, 2-pager, 1.5-pager that hits on all those major food groups and gives you a lot of clarity on what to plan for. So with that, this is one of those prongs of mapping out your retirement. Again, it's not just, hey, what number do I need so I don't need to rely on a paycheck? It's what do we want to do in retirement? What's our lifestyle going to be? What are those bucket list items? What are causes that we're passionate about? And so it's actually an enjoyable exercise as well, as it allows you to kind of expand your thinking a little bit and really build out that dream scenario. And then, we're here, right? This is what we do to help map out a path to get there and really, look to work towards accomplishing that dream retirement. So it takes a little bit of time. I know it could be daunting, but a really terrific exercise to do and help you navigate that first iceberg. The second retirement iceberg that we tend to see is lacking of tax diversification. We all know what investment diversification is, right? Don't have all of your 401k in Boeing. But a lot of times folks aren't familiar with tax diversification, and that gets a lot less expectation. And there's a common misconception that when you're retired, you're going to be in a lower tax bracket. But a lot of people really, find out in a little bit of a jarring way that that's not necessarily the case. So when we look at taxation and retirement, there's a few kind of income buckets that are pretty rigid. But first off is if you take the pension, you're going to be showing pension income, right? That's going to be regularly received and taxed. In addition to that, if you took the lump sum rather than the monthly pension, whenever you tap your lump sum rollover for retirement income, when it comes out, it's taxed, just like a 401k or IRA. In addition, at a certain point between the ages of 62 and 70, you and your spouse, if you're married, will have Social Security benefits at some point. So it's a decision on when to take those. And then lastly, in your 70s, you have to start taking out an RMD, a required minimum distribution on your retirement accounts. So that's your IRA, 401k, lump sum rollover. You do not need to take an RMD in a Roth account, but every dollar that comes out is taxed as ordinary income. And so we see it all the time where a couple's retiring, one of the spouses is retiring from Boeing. They're saying, I've done the hard work. I've got, I've amassed, $1.5, $2 million in my 401k and with my lump sum. If you don't take the lump sum, I have this pension income. I've been paying into Social Security. I am ready to go. And then what they come across is all the income that they want to take to support their expenses on a monthly basis is taxed as ordinary income when it comes out, because all those buckets are taxable when accessed. And then on top of that, in those one-off years where I want to help my kids with the down payment, I need a new vehicle, I need to replace my roof, as additional draws are taken, those are taxed as ordinary income too. And we'll see it all the time where you could be retired and you'll have years where you're in the 30% plus tax bracket. And so if you've watched any of our webinars or read our articles, I'm fond of this retirement tax headlock kind of image. And again, here we go, right? You can see there you are, IRS has you in a tax headlock where I'm retired, I should not be paying all these taxes, but for me to just continue to operate, take income, live my lifestyle, boom, I'm back in these really high tax brackets. And so as a result, when we look at tax diversification, we want a spread of different account types from a tax character perspective. We're going to have our tax deferred 401ks, IRAs, lump sum rollover. In addition, it's good to have some money in a non-retirement account, a brokerage account, for example. Big fan of the Roth accounts. Again, all the funds in there, if used properly, are tax-free once taken out. The growth's tax-free. Health savings accounts are wonderful as well. You get the triple tax advantage. And so really, rather than having all of your eggs in that dark blue circle, it's good we're at a good, reasonable tax rate in those years leading up to retirement. We can spread it out and get some diversity, allowing us to be in a much more manageable tax bracket in retirement. The good news is it's not too late to do this, even if you are retired. Commonly, those early years in retirement, we call the gap years, where you're not, you haven't started Social Security yet necessarily. You're not having to take required draws from your retirement accounts. We still have really favorable tax rates, at least through 2025. We'll see if those are extended. And so you have time, even if you're right at the tail end of your working career. And this is a great time, those last couple of years, again, I mentioned we have really favorable tax rates to take action right away. And you could absolutely move the needle in those final years of retirement, in the first couple of years of retirement. And the way to do that is, the likes of using your Roth 401k, doing mega backdoor Roth, doing Roth conversions, using your health savings account. Watch our last webinar recording we put on our website. It's called the Retirement Savings Hierarchy. We really go into depth here, but there's a lot we can do to really set you and your family up for a lot of success down the road. I'd say just about everyone we meet with and work with has a big opportunity to move a needle here. So I'll mention how to get a hold of us later on, but go to our website, again, planyourboeingretirement.com, and set up a time to talk with us, and we'll kind of see what we can action. We just had a client retiring from Boeing this year. Him and his family are moving to Idaho later this year, retiring in the summer, selling their house, moving at the end of the year. We're doing a lot of Roth conversions right now, pumping money into the Roth within a favorable 24% tax rate, especially because in Idaho, they're going to have a 6% income tax. Washington doesn't have an income tax, right? Down the road. And so there's all these different situations and angles, whether you're staying in Washington, moving out of state, you name it. So there's a lot we can do here in those late years of your employment before retirement and the early retirement years. So do not be discouraged. Okay, so we covered spending plan, making sure we're aware of what those retirement expenses will be and what your goals are. We went over tax diversification in addition to investment diversification. The third iceberg is having a plan for retirement medical expenses. Fortunately, for many of the folks at Boeing, you have early retirement medical. So with that, we just need to make sure we use it the right way and don't do anything to goof it up. For those that are not eligible for retirement, early retirement medical, we got options. So that's the good news. So the way it works is you are on your employer, you're on Boeing's health insurance. And so they pay the bulk of it, right? So they're covering that as a benefit to you. Once you are 65, you're going to be on Medicare. You need to pay for Medicare, but it's a really good program. It tends to be very cost effective. And no matter what everybody's eligible basically if you've been paying into Medicare, and you're a citizen here, right? The interesting part is those years between retirement and Medicare, especially because at Boeing, commonly a lot of folks will retire in their 50s, right? It's common where people aren't going all the way to 65. And if you do not have a good plan for retirement health insurance, it can cost you hundreds of thousands of dollars for retirement medical over your lifetime for a couple, right? It's a very big expense that could be very unpredictable as well. These costs are amplified if before Medicare age 65, you do not have a strong health insurance, early retirement health insurance plan. And so it's really critical to have a game plan here. And so for everybody, we just really suggest start planning right away, start planning now. And many people just don't realize we have a lot of control over what these expenses are. And so it's not something that you're just stuck no matter what, right? It's just we need a game plan on it. So starting with Boeing's early retirement medical. So generally speaking, if you're last hired before 2007, generally, if you've been, last hired, so consecutively hired since then, generally you'd be eligible for Boeing early retirement medical insurance. Verify your eligibility with HR. This isn't too important to get wrong. But basically what it allows is you're going to remain on Boeing's insurance all the way to age 65 Medicare. You, your spouse, your dependents. Yes, you're paying, some out of pocket, but it's a real home run deal. It's very affordable and tends to be quite a bit less expensive than Medicare. I know Boeing just came up with a new Medicare Advantage plan, but in general, it's a real affordable deal. You want to make sure, if you're eligible, ensure your spouse and dependents are on your insurance prior to retiring, right? We want to make sure we have the right ordering here. So that's a really big deal. That way, even if you turn 65 well before your spouse does, they're able to continue to be on the Boeing early retirement medical as well until they're 65 and on Medicare. So it's a real home run. Okay, let's say you are not eligible for the early retirement medical. There's some other alternative options before age 65 Medicare. First of which is COBRA. So you are able to stay on Boeing's health insurance for 18 months after you separate from Boeing, a year and a half, and you stay on the same plan. The good news is you get the same doctors, you get the same network. You're not on your own. You get kind of the negotiation power of Boeing. The flip side is it's no longer subsidized. You're paying the entire amount out of pocket. So it's a lot more than you've been paying when you've been working. Once those 18 months are up, or you could do this earlier, Then you do the Affordable Care Act insurance plan. So that's basically the private insurance marketplace that's set up state by state. So in Washington, it's called Washington Health Plan Finder. And this is basically the cost of this depends on what your income is. So, they have Regents, there's a Kaiser option, kind of a lot of the big names are available. And, first thing comes to mind is you're like, oh my gosh, this must cost an arm and a leg, right? I'm on my own private insurance now. And the way it works with that ACA Affordable Care Act plan is that the government's actually subsidizing the cost. And as your income goes up, the subsidy goes down, so it becomes more expensive to you. So for somebody showing really low income, this could be a really inexpensive plan and really good coverage. On the flip side, for someone that has 200,000 of income in retirement, it's going to be very expensive, right? It could be very, very significant. And so you have a lot of control over your premiums if you have control over your income. And again, it's tax return income, your modified adjusted gross income. And so, the main reason that we see people be hesitant to retire early from Boeing or elsewhere for that matter is if they are not eligible for the Boeing early retirement medical. So again, if this page speaks to you, they're like, gosh, how am I going to do this, right? It's going to cost so much. And so the reality is it's not a deal breaker. However, we need a game plan essentially in terms of how to manage your health premium costs, health insurance costs, manage your income. And so this goes back to that tax diversification a bit, right? If we're able to pull a retirement income that's not showing up on our tax return, we could actually manage retirement income strategy that allows you to keep good subsidized insurance and stay at a lower health insurance cost. So a very big deal. Okay, once you're age 65, once you're on Medicare, you'll transition to Medicare from kind of a Boeing early retirement medical or the other options that we talked about. Boeing has a Medicare Advantage plan through Aetna. This is a newer deal. I think it's just come out. We're a year or so in. And the main thing there is you want to make sure your network of doctors is covered. So far, it tends to be inexpensive on the monthly. I know there's some kind of nuances on the fine print for catastrophic, for example, to be mindful of. But I've seen clients have a pretty good experience with this so far. If you're 65 before your spouse, when you go on Medicare, you have to select this Boeing Medicare Advantage plan, the Aetna plan, for your spouse to continue to be on Boeing's early retirement medical. Once you're both on Medicare, you could bail from the Boeing Medicare Advantage plan if you want and do kind of regular Medicare. It's something we can discuss. But again, if your spouse isn't 65 yet, sign up for it. In most cases, make sure your network's covered and everything, because it's a big deal to keep your spouse on the Boeing early retirement medical. This is critical. And so as I mentioned earlier, tax diversification, Iceberg 2, health insurance, Iceberg 3, go hand in hand. For that non-Boeing early retirement medical, so again, the ACA Affordable Care Act, Washington Health Plan Finder, the lower we're able to keep your tax return income in retirement, the lower your health insurance premiums will be. And so again, this doesn't mean we need to limit how much you're spending in retirement or what your income is. We just need a game plan on how to manage what that tax return looks like. For example, when you take money out of a bank account or a non-retirement account without capital gains, that doesn't show up as your tax return as a draw. Likewise, if you take money out of a Roth IRA that you had in a proper way, that doesn't show up on your tax return. So there's a difference between what your income spending is and what your tax return income is. And so this is something through tax diversification we could really manage for you. And we've seen in many cases it could save you and your family, $10,000 a year or more in insurance premiums. So it's a really big deal. Once you're on Medicare, your income, tax return income also influences your Medicare costs. So there's something called IRMA, where as your income's over certain levels, you pay these additional Medicare surcharges. It kind of acts like an additional tax that could be really meaningful depending on what your tax rate is. It could be an extra $300-400 a month, right, per person, depending on what income level that you're in. And so likewise, we have a lot of control through tax diversification of managing what your Medicare premiums are going to be for the rest of your life from age 65. And so this is something that a lot of folks don't realize and sneaks up on them. But by putting together a good game plan, right, like with us, this is what we do with clients with your financial planner, can save you big time money over the years. Okay, so in conclusion, bringing it all together, the really good news is that each of these retirement icebergs that we covered can be avoided and managed with proper planning. If you have the right navigation, as you can see, from our crew member here, right? And so, there's some risks out there that are going to be a lot more sporadic. Where's inflation going to go? What's the market going to do? Are we going to have a recession? Those things are going to happen and go in cycles, and they're out of your control, right? We can make sure we have the right amount of risk in your portfolio, manage it to you, but we're going to see volatility around those, right? These icebergs are things that with proper planning can be avoided, which is the good news on this. It's just something that we don't want to be blind to, and we want to have a game plan as we head into retirement. And so really critical right away, start establishing a cohesive retirement plan, aligning your goals and your finances goes a long way towards retirement success. And, essentially these are things on top of what's my retirement number that we want to be really diving into with folks we're working with as they get ready for retirement. As I've kind of mentioned in the past, take us up on a free financial checkup. These iceberg conversation, this navigation, this is where we come in, right? This is what we do every week. This is what we do for our clients. This is right in our playbook. We have a process around this and steps to take both in pre-retirement and retirement. Just because you're retiring for the first time, you do not need to go it alone. And so, you could sign up with us. We're offering a 1-hour complimentary financial checkup. There's no cost to this. There's no obligation, but really take some time to pick our brain and get some good feedback and see it might be a good fit for us to help you work through these things. You can contact us. I have our phone number down here and our email. So feel free to reach out. Likewise, a really good way to do it is you could go to our website, planyourboeingretirement.com, hit that big orange button in the top, the Let's Talk button, and that'll take you to a screen where you could schedule an introductory meeting, a phone call, a Zoom meeting. And that way we can just kind of talk through your situation, set up that 1-hour, free consultation. So I'd really recommend you take us up on this. This is one of these things where retirement, taking the right steps, there's no do-overs on that. It's just so important to get it right. And so we found just working with a trusted partner, at least getting a second opinion from us, is just really a win-win proposition for those that we talk to. We're going to be doing more of these seminars and webinars. It has been awesome, seeing more and more people join these. We've got wonderful feedback. Please extend these invitations to your colleagues. This is where we meet more people. The more people we could help and educate, that's really what our goal is here. Likewise, go to our website. We post recordings of all these webinars and the articles that we do on there. So you could access it, you could rewatch it, you could pass it along. And I've got great ideas from those that have listened in terms of topics that would be helpful to cover. Last year was the first year we did an open enrollment webinar. We're going to do the same thing again this year. And we got a ton of hundreds of views on that and feedback, which was wonderful. So I'd love to hear from you. Again, you could contact us through our website to hear certain topics that would be important to you. Thank you again for joining. Really appreciate it. Reach out with any questions. Look forward to hearing from many of you. And you have a great rest of your day. And looking forward to keep providing more good, impactful content for you down the road. All right, take care. Thanks.